this back up here and decided it wanted to go back to the very first. So here's what we talked about, obviously. Cross-selling life insurance will boost retention on your current property and casualty block, even if you don't care about life insurance and you don't even think about that, hey, if one of the mother or father in this family dies, now I no longer have the homeowner because they've got to move to an apartment somewhere else. It builds the retention on your core business and boosts first year revenue. In order to do that, you can do whatever effort level you want to make the most. You should take a little bit of time to get your staff trained in changing the verbiage, just adding a sentence or a question each time. And by the way, I didn't mention this earlier, but our staff here can get on Zoom calls to help train your staff. You may say, Dave, that's great. I'd love to, but I really don't know that myself. That's fine. We do. That's what we're here for. We're here to help you grow your business. So get a hold of your rep over here. If you don't have a rep, well, reach out to us and we'll get you one. And then we can help train your staff so that they can help to grow your business, the retention, the revenue, and use electronic tools where all you got to do is once a month pop in there, tell it what marketing to send out, and you can even let us sell for you. So you know your people taken care of, and you still make revenue, and you've not had to get out of your comfort level, staying in your lane, building your business the way you want. So that's it. I guess, Chris, if you want to hop on, and if there have been questions pop in, let me know.
Sure. Yep. I'll take any questions. And question I have, how can people get in touch with you if they can't think of a question right now and they just want to get in touch?
Well, I'm glad you asked that. That's the next slide. Yeah, so if you have a different brokerage manager here, obviously their first initial last name at pennyinsurance.com. Our main 800 number is 800-823-4852. My extension is 8791, or if you're like me and you hate going through dialing extensions, you can just dial 916-960-8791 to get me directly. So that, yeah, reach out. And I believe we are recording this, and this will be on our YouTube channel. So folks on YouTube, go over to pennyinsurance.com, check us out, email me, call me, and we'll help you grow your business.
So one question, so which life insurance products are best for P&C agents to start selling?
Good question. Now, there is a ton across the board that we handle. What I've found is that if this is not a specialty that people do, keeping it simple is the best. You don't want to get out of your depth. Stay with term and GUL. So what a GUL is a permanent plan, but it doesn't have all the cash value that can complicate things. Since property and casualty is more of a transactional type sale, the value sale, cash value, is great, but rather than confusing people and taking all your time to learn something new, which we're glad to help you, but keeping it simple as you implement new things. Term, quick, easy, by the way. I'll give you two sets of questions that I did not put in here, but they popped in my head. First is just a 3-question life insurance close if you're talking to somebody. Again, people don't want to talk about life insurance, what it is. They want to talk about what it does. And you'll notice the verbiage on here intentionally doesn't mention anything about insurance or companies or products. It's simply, hey, if you didn't make it home from work tomorrow, what's going to happen to your family? And then just shut up and let them talk. Don't suggest anything. Then when they're done answering, a lot of times it'll be like, well, I guess we could sell the house, raid the 401, whatever. Whatever the answer is, the second question is simply, oh, is that what you want? Now, if they say yes, well, obviously you don't have a prospect. They don't love their family. If they say no, well, then the third question is, well, how much do you feel you could comfortably set aside every month to solve this problem? So you've got a premium commitment. You're not saying how much could you afford like a used car salesman. So that's just a general topic because it talks about what it does. Then people might say, well, gosh, how much do I need? And you're like, I don't know, because that's not an area you work in. Well, this is really easy. And you don't have to be an expert. You just have to know very simple math. And the first question is, okay, so if you didn't make it home from work tomorrow, how much of your income would your family still need? Let them answer whatever it is. It could be their full amount that they make. Usually it is. It could be half of what they make, whatever. And you say, okay, well, how many years would they still need your income? Then they tell you that. Well, easy math. Take A from the first one times B the second, and that is your answer. They could say, well, my family would need 100,000 a year for the next 10 years. Okay, great, that's $1 million. If they say, whoa, that's a lot. Well, great, that's fine. Do you want to lower the amount per year, or do you want to lower the number of years? So it's their math, and they own it. And you're not selling; you're just helping them to figure what they need. Anyway, sorry, side little thing there, but back to the question: keep it simple. Term through at least when the youngest child is through college, ideally through retirement, and then some GUL, some lifetime. Because some people are like, yeah, I want that 100% guaranteed return. I don't want a 30% guaranteed return that I mentioned from the earlier stats about before 65. Hope that answers, if too long.
And another question, how do I position life insurance for younger clients who may not feel they need it yet?
Well, if younger meaning no kids yet, that's a different story than younger. Because if they're younger and then even if it's a husband and wife that don't have kids yet but are married, and this is not meant to be sexist, it's just the reality of the way biology works. The husband should immediately have at least 10, if not 20 times his income, because something could happen to him with his wife being pregnant and they not know it. And now you've got a kid that's got to be raised till age 20. So the husband, as soon as they say I do, needs to have 20 times their income. And bluntly, at that young of an age, the income's not that high, and it's so dang cheap. If it's somebody who's single, I still say get something, because you're never healthier than you are right now. Things happen in people's 20s and 30s. Well, heck, like that guy I mentioned in the story earlier, he was mid 20s. But even if it doesn't kill him, somebody can all of a sudden be a diabetic. Some kind of thing happens in their life where now they're not insurable. They want to get married, great, but they're going to pay tons of rates. So I call it insuring your insurability. A 20-year-old insurance is so cheap. Just get something in place. That way down the road, at some point, they'll probably want a family. At some point, even if they don't have a family, they'll have a business, somebody who might depend on them. And actually, at that young, that might even be a discussion to have permanent. And we won't go too much into how permanent can work here. But for somebody who's 20 years old, gosh, getting a little $100,000-$200,000 whole life that'll be around forever. Because by the time they're in retirement, that's going to be a funeral anyway. So there's inflation. So that's what I would recommend on young folks. They still need it. Because they will die, and they're probably at some point in life will be somebody who depends on them.
And another question, how should I approach clients with health issues or impaired risk?
Oh, yeah. Well, health issues, I think, are a fantastic opportunity because they need it more, and they're more likely to make a claim. Um, when I first started in the business, that's one of the things my manager taught me was that if you get somebody rated, you're their hero. You're coming to them saying, hey, even though you have this and that, we can get you coverage. So if they're rated, they just need it more. If it's an affordability issue, well, we can always play with what the face amount or length of term is. But we at Penny specialize in impaired risk. I've done nearly 3 decades working with impaired risk. We have our own underwriter on staff in the agency who's in our employee, not an insurance company. And we work with like 60 plus carriers. So if you have a person who has some difficult health issue, if anyone can find them coverage, we will. So just get a hold of us and say, hey, here's what I got. What do I need to know? And we'll work with you from there.
So I think those are all the questions. So yeah, thanks to everyone for joining. We're going to provide you with, for everyone that registered, we're going to provide you with a video recording of today's webinar. So we'll provide that within 24 hours.
Awesome. Well, thanks everybody for hopping on. Look forward to hearing from folks to help you grow your business.
Thanks, everyone. See you next time.